Recording now.
Sounds good. All right. Well, good afternoon, everybody, or good morning, good evening, wherever you're calling in from, or dialing in from, or listening in from. Thank you for joining us today. I want to thank Dave and Anka for putting on this show, inviting us to be a speaker. The biggest thing I wanted to talk about today is what I consider to be modern candlestick. Now, some of you guys who might know me might already have heard about this, maybe not, but I hope that I can shed some light as to the candlestick signals that is helping us a lot in actual trading. Now, I do understand that because there's so much to learn, I won't be able to go through every single one of them, but my goal here today is, again, to just open up your eyes to see that there are some things taking place, and there's ways to see how to take an opportunity of this market, and it's not really that hard. And so what I'm going to do here today is I'm going to show you one pattern, just one pattern, that allows you to see when markets have hit bottom. Now, the reason why I chose this one is because a lot of times we hear people talk about the market bubble and a crash, and it's almost like a fear monger kind of situation where all we hear about is the bubble, the bubble, the bubble, the crash, the crash, the crash, bear market, bear market, bear market. But not too many people hear about, oh, wait a second, that is the bottom. Unfortunately, by the time they hear about this is the bottom, it's usually well in hindsight. And so today I'm hoping to show you just one pattern that can help you see when a bottom is actually beginning to take place, when it's actually forming as it's actually taking place, so that way, the next time you see something like this, hopefully you can start seeing this, and rather than panic or just be on the sidelines, not knowing what to do, you can at least say, wait a second, I'm beginning to see that pattern that is showing that this stock or this instrument or this market is beginning to show a bottom again. Okay, so that's my plan for today. Let's see if we can go ahead and get started. Oh, but before we actually do that, I do have to go through our disclaimer, right? We do have to go through disclaimers. Everything we share here today is for education purposes. It's not a recommendation to buy, sell, or hold anything whatsoever. Please understand the stock market does involve risk. You could lose money, a lot of money, if not everything. So be aware of that. All I'm doing right now is just sharing with you things that has helped me with my trading, and hopefully maybe it can help you with yours as well too. All right, so today, again, a bottoming pattern, and the key word is a bottoming pattern, a pattern using candlesticks. We're going to use one candlestick and kind of see how that goes. You know, I say a pattern because one of the things that I find with a lot of people in the stock market is I hear a lot of comments about nothing works. Fundamentals doesn't work, technical analysis doesn't work, nothing works. Everything is just crazy. It's manipulated. The feds are doing this and all that kind of stuff. Nobody can really do anything in this market. And what I usually ask people when I hear that is, I say, is the stock market really random? And the answer is not, and hopefully I can show you through these patterns, because the definition, if you go on Google, you type in the word randomness, the definition comes out to something like a lack of patterns, okay? A lack of patterns is what randomness is all about. And in this case, that's not what the market is. The market does show patterns, and hopefully I can show you some of these patterns here today. So a little bit about myself, Chief Technical Strategist over here at Right Side Trading. I've been in accounting and finance and investment background for over 17 years. Including 8 years of technical analysis in the stock market, specialized in identifying sound companies at attractive prices. Notice I didn't say cheap prices, but attractive prices with low risk and the potential for capital appreciation. That is simply what we focus on. We want to find good companies at attractive prices, call it discounted prices, or companies that are being offered at a good deal. Okay, that's completely different from buying companies that are low at $1 and going bankrupt. There's a big difference between that. All right. But we research, and our studies are focused on price movement and patterns in the major indices, stocks especially. We trade IPOs as well as dividend stocks and earnings, and some seasonality as well as some stock splits. But that's pretty much what we focus on here. Okay. I have a quote that I say, people get excited about stocks that have made huge moves. But the true credit, in my opinion, goes to those who can train their eyes to see the setup. And that's what we're going to be doing here today, is I'm going to show you what the setup looks like before these stocks really took off. Okay. Now, can you relate? Like I said before, a lot of people are saying there's a big disconnect with this market and this economy. And if I might just say something about this, because I hear this almost literally every day. I get text messages, emails from people. Well, how can the economy be looking so bad, but the market is going up? This is just nuts. This is crazy. And the only thing I can say to it is like, there's a difference between the market and the economy. Let's just be honest, okay? The financial markets and the economy, I understand that they're supposed to go hand in hand, but it's almost kind of like saying your hands and your feet, right? And it's like, because my hands hurt, that means I can't walk anymore. Not necessarily, right? They are part of the same system, so to speak, but they function slightly differently, right? The financial markets and economy function slightly differently to give us what we understand as the civilized world. But nevertheless, just because the arm is hurting doesn't mean that the system cannot still keep on going, in the sense that the legs can keep on moving. And so just please keep that in mind. At least that's the way I see it. It's like there's a slight difference between the two. And for those people who are just like, no, I'm not doing anything because my pinky finger hurts, then that means I can't do anything at all. It's like, you can still function even with a broken pinky finger, so to speak. Okay, so we'll just leave it at that. So let's talk about some patterns here. Here's a report that I actually, I'm the editor of this, the Right Side Report. I write this report every weekend and send it out to subscribers by the end of the week, which is on Sunday. Really, it's send it out by Sunday. But there's a few things I just want to highlight on this report. And this all leads into this whole concept of there are patterns in this market. Now, prior to the whole financial, the whole COVID-19 crash that we had, if you notice the date right here, it says January 24th, you will see that in that report, before the COVID-19 became a pandemic that we're now experiencing, in that report, in this section right here, I just highlighted the same thing. You can kind of freeze the video when you watch this and kind of go over it again. But an excerpt of that, on the 24th of January, before things got really, really bad, one of the things they said is we'll be discussing the major indices, which is telling us, that's the key word, it's telling us that we should be prepared for a potential drop. Now, we said potential drop simply because we didn't know how bad it was going to get, but it was without question that we knew something was about to go down. And when I say down, in the sense of bearish fashion. It goes on to say, and we will also talk about the VIX and how that is beginning to shape up with spikes in volatility. So again, on the 24th of January, we already started seeing signs, because there are certain patterns that were beginning to show up over and over and over. And this is why I say the stock market is not random. It's just simply that most people don't understand or know what patterns to pay attention to. And then I go on in that same report and say, because this market is in unison, there's a concept we teach called a market in unison. So because this market is in unison, we expect the uptrend. And if you understand, prior to February, when the market started dropping, the market was doing really well. And we said, we expect this uptrend to come to an end. And then we said here, we need to be ready for either a slowdown at best and a reversal at worst. And the key word here is the writing is already on the wall. The writing is already on the wall. It is time to take profits. It is time to exit positions. The market is warning us to take heed. Okay, these were very strong, bold statements. This was not one of those where we say something and then we hedge ourselves by saying, but it could go up as well. It was very clear, very concise, very to the point that said, look, the writing is on the wall. Something bad is about to happen to this market. The patterns are beginning to show that a bearish pattern is about to take place. So take all your profit, exit your positions, take heed. The market is warning us. And back then we would say, look, if anybody comes back and says, oh my gosh, I lost all this money in the market, it's like, it's simply because you were not aware of the pattern that the market was beginning to show us at that time. Now, the market goes down. Let's fast forward to 2 months later. on March 27th. Now, actually on March 23rd, we were doing a live webinar. And on that live webinar on March 23rd, I said the market is ready to go back up. Now, so many people were not able to see that at the time. It's like, wait a second, the market's ready to go back up. With so much negative news in the media and all around us, how can this be? It's almost like impossible to even think that. Now, the report came out that weekend on the 27th, but we saw it as early as the 23rd. But in that report, here is the report on the 27th. You can see this right here, March 27th to the 20th. It says, the question is, have we found the bottom, or is this just a relief rally? Because a lot of people were wondering, and for the longest time, people have been saying, oh, it's just a bear market rally. It's, it's just a bounce. It's just a bounce. And we said this right here, the answer. Okay, so again, this is us making a bold statement, not sitting on the fence or hedging ourselves. It's like, here's what's about, here's the answer. Here's the answer. Here's what technical analysis is now telling us. Akin to the bearish signals that warned us of the bearish drop, this time, the market is communicating that it is time to cover all short positions, okay? Cover all short position, exit all your shorts, and get ready for a rally. How are we able to see these things where, again, most people now are here, it's like, man, I wish I had bought this market back on March 23rd, or I wish I'd got into the market in April and May. Oh my goodness, I missed out of this huge rally that took place in April and May because of so many different reasons. The news was bad. We didn't think it was going to happen. We thought the market was going to keep on going down. I didn't think this could really go as far as it did. But again, we saw the patterns on the 23rd through the 27th that week, the 23rd through the 27th, and said, oh my goodness, this is the bottom. The market is getting ready to go higher, okay? So I share that with you because I want you guys to see, not only did we call the top, but we also called the bottom, right? And we did this simply by understanding and seeing repeatable patterns taking place in the market. We didn't sit on the fence. We didn't hedge ourselves. We didn't say maybe it could or maybe it wouldn't. It was like, no, this is really happening right now. And anybody can learn how to do the same thing. And so let's go here and let me start showing you some things. Again, this is just one out of many things that we saw, but I'll show you this one. And a lot of people right now are still wondering, is this market bullish or bearish? There's some people that are shorting this market and getting hurt from shorting this market. But we'll show you guys some things. So the pattern that I want to show you here today is this pattern that we call bottoms up. Okay, how many people have ever heard or seen this candle? If you, somebody who's not part of our community, I should say, a bottoms up, right? Here is the bottoms up candlestick. And what we see here is a pattern that has a green and red candle, obviously. And it has to be green and red. There's two candlestick formation, green and red candle. What happens here is very simple. Let's just go right into it. We don't concern ourselves with the wicks. Okay, we don't concern ourselves with the wicks. All we care about is the body of the candle. That's all we care about, is the body of the candle. And so what we do is we look to the body of the candle and we say, look, if the bottom of that green candle is below the bottom of the red and the top of the green candle is somewhere inside the body of the red candle, we have what we call a bottoms up. Now, some people might try to confuse this with a piercing candle. It is not a piercing candle. Piercing candle is slightly different, all right? But this is a bottoms up candle, and that's what we call this. When we discovered this, it was just like mind blowing. And I'm going to show you some of the things that we saw that just made us become true believers that this is truly a bottoming candle. Let's go to the chart. Here's the chart of the S&P 500, okay? What I'm gonna do is to direct your attention to October, November, December of 2018. I don't know how many people were in the market then or who can remember what was going on in the market back then. October, November, December, the market dropped. A lot of people was like, oh my goodness, this is the bottom. This is the bottom. Market is getting ready to drop. And it did for a while. And all of a sudden, by January, we had this pattern right here. This is that same market bottoms up candle that we talked about. Now, how do we know that this is the same? Well, we can see right here. The bottom, again, we ignore the wicks. The bottom of this green candle is below the bottom of the red candle, Yeah, again, ignoring the wicks. You got to ignore all the wicks. And the top, the body of the green candle is somewhere in between the red candle. That's it. Most people were prepared for the market to drop. I believe this is when the trade wars were really in high gear with China and United States. And a lot of people thought, wow, this is really going to take it down. We had not seen a huge drop like this in a very long time. And people just like, well, it's ready to go down. But lo and behold, we had a bottoms up candle. And this was on the monthly chart, by the way. And boom, we saw market go back to all-time highs. It was interesting because when this market was dropping in 2018, October, November, December, it was like, oh, this is it. This is it. It's the crash is here. It's all over. It's all over, right? And then when January came and we saw, wait a second, we have a bottoms up. It's like, wait a second, bottoms up means that the market is ready to go back up again. And people are like, no, don't trade it. Da 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 da. And then we made all-time highs from in 2019. And then it was like, wow, 2019 was one of the best rallies we've had in so long, which is so interesting because after it happens, then we start hearing people come out, oh, it was the best rally, since 1990 something, right? But when it was actually happening, if you paid attention to what people were saying then, it's like, nope, it's not going to happen. It's not going to happen. That's all we're here. But I share this because, again, this was a major bottom that took place because it spooked a lot of people before we went to all-time highs. Now, let's go back in time to the financial crisis. This is the financial crisis of 2008, the big one. This is the one where I learned, it's like, I want to learn how to trade the market from now on. Long story short, everybody talks about how the bottom was in March of 2009. March of 2009. Now, truth be told, I wasn't even involved in the stock market in 2009. I knew nothing about the stock market whatsoever. If you asked me what a bull market was from a bear market, I couldn't even tell you back then. I was in real estate. I was a real estate investor, losing everything in real estate at that point in time. And I remember having to try to figure out what else to do going forward and really feeling the effects of this financial crisis that took place until 2013. It wasn't literally until we got to 2013, somewhere up here, was the very first time I even heard anybody say, hey, the market is kind of like recovered. And I was like, what do you mean it's recovered? I thought we were still in a recession. Come to find out that we had bottomed out way down over here. So where would you enter on the bottoms up? The very next candle. You can enter the very next candle. Usually what we try to do is when we see a bottoms up, we draw a line right here at the top of that body. Again, if you want to be a little bit more conservative, you can draw a line at the very peak of that candle itself, like include the wicks in this case, if you just want to be a little bit more extra conservative. I like to be conservative personally, but if you're a little bit more aggressive, I'll say, look, once we see the next candle close above the body, that's your buy signal right there. Okay, if you want to be a little bit more conservative, if you see it close above that high, that's your buy signal. Does that make sense? Now, one of the biggest challenges is people are like, oh, but that's too long, Wally. By the time it gives me the confirmation, the market could have ran away from us. It's like, well, let's take a little step back. Because if we're talking about this is a bottom and you're trying to get into the bottom of the market, does it really matter whether you bought it absolutely at this bottom here? Or what if you even bought it somewhere over here? Knowing that, or maybe what you even bought it over here, would you be happy still being in a market and saying, hey, wait a second, I know that we are in a market that has now hit bottom. I don't have to worry about a bear market anymore. Okay. And that to me is the huge aspect of this. And literally by one candlestick signal right there. Okay. All that does is just this. So this bottoms up candle marked the bottom before market started staging one of the greatest bull market in history. What ends up happening is that people started, they watched in amazement. Some people sat on the sidelines forever. I was one of those people. For 4 years, I didn't jump in the market because, again, I wasn't even involved in the stock market. But there were people that I've heard since then that I didn't believe it was going to happen. A lot of stimulus was going in. The feds were manipulating the market, and they just knew that this was a house of cards that was about to come crumbling down. And it never did. And they were just sitting on the sideline in amazement as market kept on going higher and higher and higher. And what started off as denial turned into frustration, and then it turned into finger pointing and blaming. Oh man, this is all a crooked market, and this is so manipulated. Forget the feds and this and that and that. It's like, oh, the feds are propping it up. It should have gone down. It would have gone down. It could have gone down if the Fed was not involved. This is so wrong, and all kinds of stories. And all that could be prevented simply by understanding, wait a second, we just hit bottom. It's interesting enough, again, like I said, you hear so many stories about a bubble. The crash is here. Before the crash even happens, you're hearing people talk about the crash, right? But nobody talks about that bottom. How do you see that bottom? This is just one, ladies and gentlemen, just one way of seeing a bottom, okay? Let's go back to the dot-com crash. Now, I was in college during the dot-com crash, right? I was in college, and I remember very well in college when so many people were going to school, and we just remembered that when it was time for us to graduate, there was no jobs out there, and we couldn't find any jobs. And so, you know, being college students in our 20s and stuff like that, young 20s, we were thinking, okay, the best thing we can do is go get another college degree. And so if we got 2 college degrees, you know, we'll be more marketable. Okay. And some people we saw, I remember one guy had been in college for almost 7 years, and we looked at him like kind of mixed thoughts. Like, wait a second, why are you in college for 7 years? But on the other hand, he said, oh, I've already got 2 degrees. I'm working on my 3rd. I was like, oh man, he's smart. He's really doing it, right? But at the end of the day, looking back in hindsight, I say, well, it was just all our way of copping out because we were afraid to go into the real world, right? And so we felt that, oh, the more education we had, the better we'll be. And I saw some people go out there and get their masters. And I'm not knocking college at all, but I'm just saying that was our reality when that was happening. And I didn't know anything about the stock market then. Market was tanking like we see right now. And again, I had no idea what was going on or anything like that. But market dropped, and we saw this go on and on and on and on. Interested enough, guess what we saw right there? That was your market bottoms. Now you might be looking at this one and say, wait a second, Wally, but you know, yes, we got a confirmation, but it didn't really go up right away. Yeah, I didn't say it was going to like shoot up right away. But notice what happened here. This bottom, did it ever get violated? No, it didn't. No, it didn't, right? That bottom never got violated. Matter of fact, we can go back to the 2008. You notice the bottom never got validated. Go back to this right here. Bottom never got validated. So when we look at this and say, wait a second, this is the bottom. It just so happens to form some type of a double bottom. Makes sense? Okay, it's formed some type of a double bottom, but anybody who was paying attention to this and understood this candlesticks that you guys are seeing here today would have said, wait a second, we are getting ready for a humongous rally. And that's exactly what took place, okay? All right. What about Apple? Let's go to some individual stocks. And so I'm going to try to speed this up a little bit now. Now, hopefully you guys understand this. Apple in 2019, Apple started dropping. People were saying Apple is done, all that kind of stuff. Ladies and gentlemen, look at what appeared on Apple right there, okay? That was the bottoms up right there. Anybody, again, who understood what this bottoms up candle was would have said, wow, here's the bottom of Apple. Now, I think what happens is some people are expecting a drop to be, or a bear market to last for like years. Some people were expecting it to drop 90% or go pretty much bankrupt before they feel satisfied that, hey, yes, we really have had a significant drop. But at the end of the day, one thing about candlesticks, and this is why I say patterns are so important, that paying attention to that and saying, wait a second, look, even if you do fundamental analysis, even if you did anything else, it's just like, wait a second, just having the open mind to say, wait a second, why is this pattern showing up now? Because again, I don't believe this is happening at random. It's like they always say, somebody knows something, right? I don't believe this happens at random. And so when everything that we are thinking logically, oh, it shouldn't happen. I mean, I've done some research on the other competitors, and the suppliers are not supplying and all kinds of stuff, and regulations is going to affect them and da 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 da. At the end of the day, this is beginning to show up and it's say, hey, wait a second, this market's ready to go higher. And what happens is market starts going higher. And again, people start off with denial because we've already had the buyers based on whatever research we've done, and we ignore the technical analysis. And so that we don't make ourselves feel bad that, we are wrong, we say, oh no, technical analysis doesn't work. Technical analysis doesn't work. I mean, that's literally what I heard this whole time when market started going up in March, April, May. Technical analysis, nothing works. I see so many YouTube comments, nothing works in this market. This is why we say don't look at technical analysis. It doesn't work. And little did they know that the market was actually telling them, yeah, we're ready to go back up. Ready to go back up. Now, how do I know the market was telling them to go back up? Yeah, because those patterns were there. Patterns were there. Here's a stock that we actually traded. Apple was a stock that we are still in. Here's another stock that we literally are still in. Restoration Hardware. A lot of people gave Warren Buffett a lot of hard time for, the stocks that he lost money on in airline stocks and stuff like that. But most people are not talking about stocks like this that he was in. He's been in stocks like this stock right here. And, first time I actually heard about this stock was through Warren, the fact that Warren Buffett had bought shares in this company. Now look at what this company did. Look, this was during the pandemic right here. Boom, right there. Everything should have told us, no, you know what, the economy's not working, right? And mind you, this was not even a software technology company at all. This was just a regular restoration hardware company. To be honest, I really don't know. I think they do furniture, if I'm to be honest. But I'll be lying to you if I said I knew exactly what these guys are doing. But all I know was I saw this in April, and I was like, oh boy, it is time to load up on a stock like this. And we did. And when they reached all-time highs, we were not shocked. We were not complaining when they reached all-time highs. By the way, and since the pandemic's happened, we've had over 23 stocks, that we have been involved in based on very similar patterns like this that have all reached all-time highs. 23 stocks. And it wasn't like we, got lucky. I say when it happens once, that's luck. It happens 2 times, maybe you have mother luck really on your side. But if you start doing it 3 times and more, it's no longer luck, okay? And we've been doing this even way before the financial or the COVID-19 crash took place. It's patterns. And this is why when all the noise was out there, the news was saying the market is going down, this and that and that. The only thing I saw that was working was technical analysis. The problem, I believe, I could be wrong, but the problem I believe is that there's a lot of people that do not understand what technical analysis to pay attention to. We've been inundated with so much information out there. We don't even know which one to pay attention to, or the ones that we do, we don't know the nuances of them. And so we use them incorrectly. And it was, oh, we give up, it doesn't work. But technical analysis is the one thing that we saw worked over and over and over again. So this stock made all-time highs. Not even sure we're still in this stock. Not sure what it's doing today. Doesn't really matter. We made killing off of this stock. Okay. Here's NIO. Anybody understands or knows this company NIO, right? It bottomed in March. It bottomed in March when everybody was saying, no, there's no way this market could go higher. This was it happening right there. Okay. Notice again, we never closed back below that bottom. Boom. Okay. And the interesting thing is, when do most people want to jump into stocks like this? Oh, I heard that it hit all-time highs of $6 right here. Let me go ahead and jump in right now. And this is why, if you recall my comments early on, it says, everybody gets excited about stocks that have made huge moves. But the true credit goes to who? The people who have trained their eyes to see the bottom. Now, interesting enough, some people see the bottom, but their beliefs will not allow them to trade it because they've been so scarred with trying to catch the falling knife, and they don't even realize that this is not a falling knife. There's a difference between a falling knife and a market bottom. And being able to understand the difference makes a world of difference. Here's the S&P on the weekly chart to kind of go back. Again, this is during that whole October, November, December. We can see right here the trade war that took place. Boom. That was our market bottoms up candle right there, signifying that we've hit bottom when everybody else was saying, no, 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 it's not going to happen. And you hear people say, is it going to form a V bottom? Is it going to form a W? Is it going to form a double bottom? And they're worried about all the other things, but the fact that, wait a second, we've hit bottom. The only thing that matters is we've hit bottom. Now, this is where people go, how long is it going to take? And how much is it going to move? That's a whole different topic. But do you understand, wait a second, to learn how to identify when we've hit bottom is a huge accomplishment. And anybody who's a trader, who's an investor, should at least try to understand when we've hit bottom, regardless of what everybody else is saying out there. And know that, wait a second, we have hit bottom. You guys all heard about this company called Slack? And when it was all over the news and hit the all-time highs, or when it's hitting those highs up here again, which is very interesting again, because even the media, God bless the media, but my goodness, they love talking about stocks. It's almost as if they just wake up every morning, run a scan. Oh, which stocks have hit the all-time highs today? Okay, yeah, this. Let's talk about that today. Okay, no analysis whatsoever. It's like, okay, that's going to be our topic for conversation today. See, that's fine for them. I don't make my money that way. I have to make my money by making sure I get in early down here. Okay. And truth be told, one of the things that, when I get into good companies like this, and by the time it gets up here, it's all over the news, I was like, I get a little discouraged, right? And the reason why I get discouraged, because now that I know that it's on the news and they're going to start talking about it, I know all these people are going to come jumping in there and make it more volatile. Okay, that's when it becomes really crazy. People, there's the short sellers who want to short because now it's on the news. Oh, it can't keep on going higher. You got to short it. And then you have the brand new people that are jumping in, don't know anything. So, oh, it's $39. Oh my gosh, let me see if I can catch it a little bit more. And it just becomes very volatile. And then you have all the day traders coming in too as well. So, oh man, this stock is doing really good. It's been on the news for the last 3 days. Let's jump in. And it becomes very, very volatile. So we prefer to find them when they're not making headlines. And so we've traded a number of stocks and that's one of the ones that we actually love the most, are the ones that are not making the headlines. Here's PayPal. We got into PayPal. Again, because we saw the bottoms up, it's like we could not pass up these opportunities here. Same thing, bottoms up right there, ladies and gentlemen. Look, I'm not making this up. This is, again, pattern after pattern after pattern that we've seen. Bottoms up on PayPal. It recovered well from the pandemic. I know what everybody was saying when the pandemic was at its worst in March. There's no way this market is going to go up. It was like, wow, we saw this right here. We started buying PayPal over here. Okay. Oh, but Wally, you didn't get in at the absolute bottom at 80 bucks. Do you think that bothers me now that I bought PayPal at $104 and right now it's trading somewhere around 156? Absolutely not. If anything, I'm just sitting back and just like, let it keep on doing this thing. It's like we can sit comfortable now in these stocks. And by the way, I trade stocks. I don't trade options. I have tons of my students who go in and it's like, I take this information, I trade options with it, say, knock yourself out, but me personally, what makes me sleep better at night is just buying the stock and just holding on to it. Okay. I mean, we talk about in weeks, stock that went from 104 to roughly about 150, I mean, that's about at least 40-something% that you're looking at right there. I'm okay with that. I'm not trying to hit a home run, but if I can get the first base every single time, I mean, even if I made 40% over a 3-month period, it's like, wow, would it really be that big of a deal? Not to me. So Stem is asking, does the bottom up candle work best with monthly chart, weekly chart, or daily charts? Does it work well with all 3 chart pairs? It works well with any time frame. The only thing I'm doing is showing you the time frames that we work on here. We love the monthly chart because we're more swing and longer term investors. Okay. So that's the only reason I'm just showing you what I do. But I've had people take the same information and go out there and use it for smaller time frames. I just don't do the smaller time frames because, again, with the way I trade and my goals and what I have and the things that I've accomplished, I can find stocks like this almost every week, if not every week, at least every month. buy that and then 2-3 months later be sitting back and enjoying the spoils of it. Okay, so I don't have to sit down and trade every single day. Usually we just buy stocks and just hold on to it for about 2-3 months and then sell and move on to the next one. Okay, we do ours by quarter to quarter basis. That's one thing that you'll find out about us is we do things quarter to quarter basis. Right now we're setting up for all the bottoms up candles right now that are beginning to show us that, hey, get ready for next quarter. Okay, and understanding, please make sure, again, I'm just showing you the idea here is to just open up your mind to see that there are patterns there. There's still some things that you need to understand. So that's why it's not a recommendation to buy anything, but understanding how to, the nuances on how to use these particular patterns that you see is going to make a difference too as well. All right. But thank you for that question, by the way, Stem. All right, so let's fast forward a little bit. Here's a daily chart of the SPY. Most people were not aware of this, again, in May. So, you know, this is not just all, excuse me. This is not just all, oh, you got lucky and it was just March. I mean, I showed you, you know, the ones in March, we showed you the ones in April, and here we are now in May on the daily chart where you're showing, hey, you know, this is it again. The most recent rally right before we had things stall out was all began with this. So anybody who was paying attention to this in May would have been able on the daily chart to capture humongous opportunities. And that's the thing, it's opportunities. Now, I'll be honest, you know, when the market was dropping prior to March 23rd, I was like, wow, this is bad. This is bad. We need to start looking to go down, you know? But then when things change and this pattern showed up, I was like, wait a second, why is this happening? And truth be told, you know, this was the first time where I was slightly looking at things, not just on technical analysis, but also seeing what the Feds were doing. I wanted to see what the Feds were doing. And that was the only thing outside of technical analysis we were doing then, was to see what were the Feds doing. And because I knew the Feds were coming in every single day saying, look, we're going to do this, we're going to do that. So I wanted to see, you know, when would we start seeing that in the chart? Okay. And so when the Feds came in and they started saying, we're going to, you know, prop up the market, we're going to do all this stuff, we're going to help everything, right? We're sending out the stimulus checks and everything. My biggest thing was like, when was it time to buy? Because a lot of people was like, okay, we know the Feds are going to do something, but it's today the day to buy. Are we buying 1 week in advance? Are we buying 2 weeks in advance? Are we too late? All that kind of stuff. My thing was, if you understand technical analysis, you understand what those bottoming patterns are, the ones that are telling you that it's ready to go up, you can kind of start seeing those things. And so we were monitoring what the Feds were doing, but at the same time, we were looking at the charts and saying, when is the Fed's actions going to be showing on the charts? And that's how we were able to time our entries so perfectly, because we knew that there would be certain patterns that would show up on charts that we need to pay attention to that would tell us, yes, the move is beginning. And so that's exactly what happened. We've all heard about Boeing. You know, Boeing got beat up so bad. I remember when Boeing was going down, I said, stay away from it, stay away from it, stay away from it. And then all of a sudden, we see the bottoms up right here. Now, notice the next day, we didn't get that confirmation, but what did it not do? It didn't take out that bottom. It didn't take out that bottom. And then we saw this go higher. All right. So eBay, here's another one. Again, again, and these are not just all technology. I mean, eBay, I guess, is a technology company, so to speak, but social media, I don't know what you call it, retail. All right. But again, same pattern there, showing us market was ready to go higher. Here is Equifax. I thought that was very interesting because, you know, Equifax is the credit bureau company, right? And even they was benefiting from all this when we saw this. Now, notice that we had the bottoms up candle. This is the bottom right here. The very next day, turn into a red, or next week, turn into a red candle. People are like, oh, it's going down. And what they have no idea is like, wait a second, this is a market that is ready to go higher. When it meets all-time highs, everybody try to start jumping into it. This is where it's too late, okay? This is where we start looking to offload. Here is where the true credit belongs. Pun intended, true credit. Okay. All right. So here's where the true credit belongs. Hopefully you guys are enjoying this. But again, my goal is to just show you that this is possible. Okay. So here's what some testimonials that we've received from people. You can see this is recent in 2020. It says, Wally, look, I have studied candlesticks to some extent, but your teaching has really put rhyme to the reason. I can tell you're born to be a teacher. You've found the answer far more I could learn on my own. And I believe that that's one of the key things here is, look, it took me a while to figure this out. And I truly believe anybody who spent as much time as I spent studying this will probably be able to figure it out. I mean, unfortunately, some people spend more time and still can connect the dots. What can I say? I was blessed. I was able to see how to connect the dots, but I did spend a lot of time. At the end of the day, I found the answer. And that's kind of like what I like about this testimony here was this guy saying, look, I respect the fact that you found the answer far more than I could have done on my own. And that's all I'm trying to do is kind of help other people show what's going to happen. Okay. The current weekly chart has the bottoms up on Friday. Are you going long? I am long. Kenneth was asking that. I am long. I've been long. I've been telling people, I said, look, we have a bottoms up. We actually had that bottoms up since last week. Okay. And so when everybody was trying to short this market, I said, look, don't short the market. You got to be aware. Again, if you saw through all those, there's going to be red candles in between. But every time we have a red candle, one of the things I even said on our webinars that we have with our subscribers, I actually warned them. I said, look, we are going to be expecting some volatility. Make no mistake about it. But I said, for those of you guys who can weather the storm is almost kind of like, I live in Florida. We have hurricanes all the time. We have the hurricanes coming. When the hurricane comes, they tell us. I mean, nobody in Florida is shocked to see a hurricane happen all of a sudden. And that's how I see the market. Nobody should be shocked about what happens in the market. If you're shocked or you're sitting on the sideline or you find yourself on the wrong side of the market over and over and over, it's simply because you don't understand how to read the data, the indicators that are telling you what's about to happen. I mean, it's literally like that. And so when the hurricane comes, we are already aware of it. And so we just tell ourselves, hey, be prepared for it. Expect some volatility. So some people get out of Florida, they move up north, to escape it. Other people say, you know what, I'm going to stay in. But when you stay in, you have to be ready. You board up your windows, you do all this kind of stuff to kind of protect your house. And then you just sit tight and let the weather get by. And one of the unique things that anybody who's lived in Florida after the hurricane, one of the unique things we all do is we come out and we assess the damage. How bad was it? Okay. But the one thing we all know is, yes, there's going to be a little bit of rough edges here, but at the end of the day, we're ready to jump back into the market, or we're at least ready to go back to work. And that's exactly what this is. So I told people, I said, look, expect the market to show up some volatility. We're expecting some volatility. But I said, until we see certain things, do not short this market. Pure and simple. We're still long. Okay. I said, if anything, we're looking for opportunities. And so on my right side report that we sent last night is the exact same thing. I said, we're still bullish. And I gave them exact reasons. Okay. Because these are not, oh, I have a feeling or I think it's going to be. It's really looking at what are the technical analysis telling us and saying, this is where the market is going. Okay. So thank you for asking that question as well. Here's what one person says, Wally, you're the best chartist. Everything that is happening in the market right now, I saw it coming last week because of your VIX video. This is what I love. It's like we're now beginning to see things happen before it actually happens. I remember when somebody who was like not a Floridian, actually not an American, came to the United States, came to visit, and they saw that the hurricane is. How do you know the hurricane is coming? I said, well, we've already seen, they told us all over the news, they're telling us, but how do you know? Like, what if it doesn't? It's like, we track it by, we ourselves don't track, we just watch the news, but we trust the guys on the news to use the indicators that they're using to tell us where it's going. And that's what we do. And like, we trust in that, but it's the indicators. And so when I see people come back and say, now I see it myself, I see what's about to happen to the market, I see what's going on before it actually happens. When you start seeing those patterns develop, so that to me are the ones that deserve the true credit, because now you can position yourself for what's about to happen. Okay. So I'll take any questions that people have. In the meantime, let me share with you guys the offer. I put a very special offer together for anybody who might be interested, wanted to learn more about how to do this. Okay. First is, I'm actually going to be having a modern candlestick. I call it modern candlestick because anybody who understands candlesticks knows that there's so many information out there about candlesticks, right? There's so many information, but what I found is there are very few that are working so well in this day and age, And actually, when I say this day and age, I'm talking about honestly within the last, 5 to 10 years that have just been very, very consistent no matter what time frame that you're on. And so what we did was we condensed all that to just 3. Okay, so like if you understand 3 candlesticks, the bullish side and the bearish side of just these 3 patterns, you don't have to worry about anything else when it comes to the stock market as far as candlestick is concerned. And so we are going to be talking about that. I'm going to share with you guys fully everything about that. Today I shared 1. I'm going to show you 2 others, but I shared 1, and I only even shared just a glimpse of it. But we'll get into the details of it, the nuances, you know, the ones that are showing you that are fake from the ones that are showing you, no, you definitely want to jump in. The ones that are going to tell you, like, look, this is probably going to go sideways for a little while, from the ones that say, now we are about to go V-bottom straight up back to all-time highs, being able to see that type of information. And again, the patterns are there. Okay, I hope, again, I've helped you guys to see. If nothing else, look, there are patterns. Anybody that says the stock market is random simply is just ignoring the patterns that we've seen here. And, you know, another thing I always hear people say is like, well, this time is not going to work. This time is different. Well, let me tell you something. It's been the same thing over and over and over, no matter what the news is, no matter what the condition is. The fact of the matter is we're always going to have something. If it's not the coronavirus, it's going to be, you know, trade war. If it's not trade war, it's going to be terrorism. If it's not terrorism, it's going to be civil unrest. If it's not civil unrest, it's going to be scandals. If it's not, it's going to be something. But the one thing that has stayed constant through all of that is technical analysis, the ones that matter. And so we're going to be going through that this Wednesday. If you cannot attend live, we'll have the recording for you. We'll make ourselves available so you can ask any questions after watching the recording so that you get this information. Once you understand this, ladies and gentlemen, you understand when to apply it, how to manage it well. It opens up your eyes to where you now see things that other people are sitting back and say, wait a second, how does this work? Okay. I'm also going to give you guys some bonuses. I decided to give you guys some bonuses to help you with your ability to use this the right way. So we have a software called Magenta Software. In that software, maybe if I have time, I'll show you some sample of that. But believe me when I say part of what we do now is already factored into the software. And so one of the biggest things that I'm just going to highlight here on the software are these 2 sections right here, which is the trade actions and the scans. So when you see these patterns and you've already discovered what stock, and as it's going up and up and up, and if you're the type of person is like, well, you sell too soon only to see price keep on going higher, left money on the table, or you held onto a stock for too long. Well, that's what this trade action helps you resolve, because every single day on the daily chart, what this trade action does in the software is it would tell you one of 4 things. Not 2 things at the same time or hedges, and it's one of 4 things. It would tell you either 1, today is the day to be buying. 2, today is the day to place your stop. 3, today is the day where you do absolutely nothing. Okay, and that absolutely nothing means that if you're already in the trade, just leave it the way it is. Or if you're not in the trade, don't even bother getting into it. It's too late. And number 4, today's the day to sell. Those 4 actions, that's what this trade action is. It literally, the algorithm goes in and looks at technical analysis that matters, and it looks at it and says, hey, here's what you need to be doing today. You either buying today based on what technical analysis is telling you, either you sell, whether you place your stops, or you do nothing. And that's important because I've seen too many people say, look, I just had somebody come to tell me the other day, hey, I got into the stock, I placed a stop over here, I got stopped out, but the stock is going higher. Well, when you go to the software is like, do nothing. And that literally prevents you from getting stopped out too early, only to see the stock go up. So if you want to get away from all that, this is why I'm offering this and say, look, use this to help you see how you can, 1, spot these, because the scans are going to help you that, spot these signals, and then be able to trade it to the best of that trend is going to give you. Okay. And that's what that is. Also, I'm going to give you my right side report. You have 90 days access to my right side report. We write this report every week. Every Sunday you get that. We'll send it out to you. You'll be able to use that to help you just see, because I write a commentary of what's going on in the market. I talk about stocks that are making headlines. I talk about stocks that we're in. You can kind of see what's going on. And if people were to email me and say, hey, can you comment on this? We talk about that. But every week we put that in the right side report so you can see what to do. And this goes on for the next 90 days, ladies and gentlemen. And then finally, I'm going to add one more bonus to this, and this is the VIX volatility. I believe everybody should get the VIX volatility because at the end of the day, understanding when volatility matters and when it doesn't is huge. The software works by itself. It's a web-based software, so you don't need any other platform whatsoever. Lobster, you don't need any platform whatsoever. Okay, it's just a website. You just go to the website and you just log in and you can see everything you need out there, which is pretty cool, right? But I'm also going to throw in the market volatility video. And the reason why I'm putting that in there, because a lot of people, again, if you notice in one of the slides I showed earlier, I said, it's now beginning to show us that there's a spike in the VIX about to happen. This was before we had this massive drop from February to March. And if you go back to the VIX, you'll see that the VIX spiked, but we had started seeing the patterns that the VIX was getting ready to spike prior to that. Okay, and then likewise, when the market was getting ready to start heading higher and the VIX, remember when the VIX was very, very volatile? I want you guys to take a look at this. This is March 24th, when I sent this text and I said, the VIX is ready now. Not it could be ready, not I hope it's ready or I think it's ready. And again, this is where I say, we try to separate ourselves by not staying on the fence. Okay, it's like, it's either a yes or no, because it's either you see it or you don't see it, right? Once you understand the technical analysis that matters, it's not about guessing anymore. Well, let me buy this, but let me hedge myself. Or I think it's going to go up, but it could also go down. Or I think the market go down, but it could also go up. We don't try to do that. We say, what is it telling us? And once you see very clear patterns, like, oh my gosh, this is happening again. And so if you see here on March 24th, that was the day after the bottom. The day after the bottom, I was like, wow. The VIX is ready, because one of the things we were doing was monitoring the VIX to see when is the VIX going to be ready to come down. Because once we know that the VIX is ready to come down, which means that the confidence level of the institutions are getting to the point where they feel comfortable putting money back into the market, we know the market is going to go higher. And so this is why we monitor the VIX. And on the 24th, we said the VIX is ready now. Markets are getting ready to start rallying again. Here's another proof. This is a text message. And the guy responded back, thanks, we're ready to do it, okay? And so what happened ever since then? Market, I mean, we saw it, go look at the chart of the VIX. You'll see from the 24th, the VIX has been going down, okay, till today. The VIX has been going down. Go look at the market. Ever since the 24th, the market has been doing what? Going up. People's like, how can that be? Again, I just showed you two evidences here again. The VIX showed us that the volatility was over, right? And we showed how in a report that the market was ready to go. It says sell everything, cover all your shorts, exit all your short position, get ready for a rally. This was not by mistake, ladies and gentlemen. It's precise information that allows you to do so. So here is the price of everything that you get with the bonuses and everything. The Candlestick Workshop in and of itself is $900. The Magenta Software is $299 per month. Okay, I'm giving you 90-day access, which will come out to $897. Also, you attend the webinars, and I kindly encourage people to attend the live webinars. It's on Monday evening. If you cannot attend a live webinar, they all are recorded, so you get a recording of that. And then we make ourselves available for any questions that you might have. We're going to throw in the right side report as well as the VIX volatility video as well. Okay, as far as answering questions, yes, we have 3 people on our staff that can help you with that. We have a programmer himself that can help you with that. We have an admin, and you have myself, okay? So yes, we'll help you and answer any question that you might need to have. We also, you know, do those Monday nights, we go through the software, we show you how to use it. We help you with that process, okay? So the special today, ladies and gentlemen, is $299, okay? You get all that. I mean, you get in 3 months access to the software. You get in 3 months access to our right side report. You get in 3 months access to live webinars for the next 3 months. And I'm doing this because I hope that this might help a lot of people overcome whatever happens over the next quarter. Guys, there are some setups that are happening right now for the next quarter that I always have to say, and I said, the stocks that reach all-time high this quarter were setups last quarter. Everybody wanted to jump into these stocks when they saw the all-time high, but they were not prepared for the setups last quarter. When the last quarter was setting up, most people were still afraid of a bear market. Well, guess what? There are stocks setting up right now that are going to become the all-time highs next quarter. And this is why I'm giving you guys this 3 months, so you can actually see this with your own 2 eyes as you walk along with me. $299 to help you get through all this, ladies and gentlemen. This is a deal that I'm offering to you guys to help you take advantage of it. And then one last thing, let me just do this real quick. I'm gonna go to the website itself, so you can go to the link that you see down here, rightside.trading.com / candle. And so I'm gonna do this because I want to show you something here, / candle. When you go here to the website, you'll see this is it right here. This is what you're going to be getting. Today we talked about the candlesticks that helps you see the bottom. That's what we talked about here. In that workshop, we'll talk about the ones that show topping patterns right before a crash, and we'll show you the ones that also show you how to tell when a strong trend is beginning. That's very important. But anyways, you go down here, you can read all this stuff that we have down here. You can read all that stuff. Go here and click sign up. And I want to show you one thing, because for those of you guys who do take action on this, if you decide to keep this, this is the offer that I showed you guys. If you decide to pay just 1 extra month of the Magenta software by itself, we'll give you 5 additional months of everything at no extra cost. Okay, so you come to the webinar, which is $299, and then you pay 1 month of Magenta, which is just a Magenta, nothing else, just Magenta, which is $299 a month. You pay 1 more month. That's offer number 2 here. And what we'll do is we'll give you everything, all these bonuses for the next 90 days. Actually, for the next 6 months is what we're going to do. The next 6 months. So an additional 5 more months. Does that make sense? I hope I didn't confuse anybody. So that's the difference between offer number 1 and offer number 2. Offer number 1, you pay $299 right now. You get 3 months to check it out. Offer number 2, but you got to take that action, today and before this offer expires, is if you pay the $299 for the webinar, you come to the webinar and just pay 1 month, 1 month of the software, 1 month of the software, you'll get up to the additional 5 months of everything else that we added here. And then one last thing we'll do too is if you decide to keep it after your time, you can cancel anytime you want after that, but if you decide to keep it, then what ends up happening is you will be renewed at a $97 a month per month for the software rather than the $299 per month. Ladies and gentlemen, I didn't get a chance to show you the software, but I promise you when you come onto the webinar, when we show you how to use the webinar, you'll see how to tell the difference when these stocks are showing you to stay in, what it's telling you to buy, what it's telling you to place your stops, or what it's telling you to get out.